FMCG and IT drags.
Stocks of insurance companies fly. This after HDFC Life surprises the market with a better than expected results and also maintains its growth guidance. It has positive rub-off on other life insurance stocks as well.
L&T Technology Services jumps in trade after reporting an inline set of numbers and guiding for a 10% growth this year. Oracle Financial Services slips on the back of a weak quarter. Ceat and Aeroflex were the other stocks buzzing in trade on the back of Q3 numbers. Hello and welcome to a fresh edition of Markets Forward, your go-to show where we aim to get you all the key data points to prep you up for tomorrow's trade. And we'll also recap what happened today. I'm Reema Tendulkar and with me is Nigel. Hi, Nigel.
Well, Reema, hi. Today was a pretty decent okay because the global cues are fairly positive and it has the ingredients to see a positive session. And positive it was. The Nifty went home with gains of close to around 100 points. Remember, today was the weekly expiry as well. That adds that element of volatility. But actually, it was pretty much a flattish day altogether. We started off with a gain of around 100 points. We go home with gains of close to around 100 points or thereabouts. The sector of the day was the insurance companies. Remember, it's become a trend right now. When you don't expect much, and in fact, the company comes out with a pretty decent set of numbers, then you see a big fill-up. And today, HDFC Life, that was a stock that in fact had a positive rub-off on all those life insurance stocks. So that was the sector of the day. Otherwise, results reactions, we had plenty out there as well. A lot of stocks were in focus. But the Nifty Bank, well, that was the one that did continue its pullback. And in today's trading session, it made yet another higher high that made the bulls feel quite good. But the real positive and the reason that your portfolios will be feeling good is because the breadth of the market was in favor of the number of stocks that were advancing. Close to around 4 stocks advancing for just 1 stock that was declining. Some bit of a pullback is what we have seen, but the bulls will want more.
Well, just a quick wrap of the movers. Well, life insurance companies right on top of the winners list today. So HDFC Life, SBI Life. Banks had a good session. So the banking index itself, the Nifty Bank up over 1%. Reliance Industries ahead of its numbers was a big contributor. The Reliance Industries share ending pretty much at the day's high with a gain of nearly about 2% on the way down. Large cap IT names, Infosys, TCS, HCL Tech struggle, and so did some of the consumption names like HUL and ITC. But let's tell you what we have for you on our show today. The top movers and shakers, always with Hormis. Insurance stock stole the spotlight after HDFC Life Insurance reported better than expected numbers. Several companies like LTTS, Oracle Financial Services, Ceat, Aeroflex reported Q3 numbers. We'll bring you a quick snapshot of that. And finally, we'll tell you the key events to watch tomorrow. But as promised, it's over now to Hormis. He joins in. He's at the big wall with the top stock movers of the day.
A good day for the index, better day for the broader markets, and within the broader markets, it was a day that belonged to the railway companies. It's been an age since we spoke of the fact that railway PSUs were outperformers in today's session, and so they were, be it the likes of Ircon, Jupiter Wagons, RVNL. Jupiter Wagons, of course, not a PSU, but look at the others. RVNL, RailTel gaining anywhere between 9% to 15%. Even IRFC was up 4% for the third straight day. A lot of earnings reactions. You spoke of HDFC Life. One earnings reaction took the entire space. Along with it, LTTS2 ending almost, well, off the highs of the day, but still holding with gains of around 8.5%. Oracle Financial was on the flip side, though. After that run-up that it saw last year, saw some profit booking after its results. Sterling and Wilson too at one point was up 10%, but ended 6.5% higher after its results. So the newsmakers in today's trading session, Dr. Reddy's after a drug approval. It wasn't such a big important drug, though. The stock ending among the top losers today. Samman Capital came out with a business update ending 8% higher. Kalyan Jewelers in the F&O band today, but the topsy-turvy continues, ending 3% lower, and Bharat Dynamics after the order win ending higher today. A lot of volume-led movers in today's session. GMDC was one of them. Sri Renuka, of course, with the entire sugar space buzzing, and Uno Minda as well, 4% higher on strong volumes. And lastly, some stocks that were high flyers in the recent times but saw profit booking recently in today's session. Motilal Oswal ending at the lows of the day, 7.5% lower. Devyani International was up 6% yesterday, gave up almost 4% of that. And Amber Enterprises too, been in the news all through the last month and a half, so also ending at the lowest point of the day today. Back to you guys.
Okay, all right, Hormis, thanks a lot for joining us and giving us that neat wrap of all the stocks that were moving around. Well, let's welcome our guest on the show. We have Jay Thakkar, who joins us from ICICI Securities. He'll help us out with the technicals, and Ambareesh Baliga, market expert, will help us out with the fundamentals. Hi, gentlemen, thanks a lot for joining in. Jay, what do you make of today's trading session? Bulls will argue that it was a good session. We ended with a 100-point gain. The bears will say, hey, you couldn't build onto those gains, and that 23,350 continues to get defended. Which camp are you in?
Well, absolutely. Very good afternoon to you, Nigel and Rima. Well, after Monday's sell-off, Nigel, I would say that markets have, managed to hold on to the levels of 23,000. Interestingly, I mean, there was no technical support, honestly. I mean, below the levels of 23,263. I mean, as the lows were broken, but then market had gone too oversold, and there was a good support from the fall in DXY. I mean, there is a good appreciation, I would say, in the INR, and we've seen the global markets also bouncing back quite sharply post the CPI data back in US, and we've seen markets now bouncing back from 23,000 levels, and it's back to 23,300. In fact, today could have been a better day as relatively, had it not been an expiry day wherein we saw that there was a huge build up at 23,300 call and put straddle. I would say more than 8.5 crore open interest is very rare to see that, and because of which we saw Nifty closing around the levels of 23,300. Otherwise, it would have been at 23,400, 450 levels, Nigel. And we have important, I would say, results as well. I mean, Reliance, Infosys, Axis Bank, and many others. So I would say that since markets have bounced back quite sharply, the PSU banking pack is showing good momentum on the upside. We are seeing good short covering in many of the beaten down names. And markets are very oversold. So there is a good chance that market further bounce back until the levels of 23,500 to 550 on the upside, Nigel, where it had actually broken down in the recent fall. So those levels can be tested at least until 23,000 levels are held.
Okay, thank you very much for that. That's the technical call on the index. Let's get to the insurance companies. They were flying. This is after HDFC Life surprised the market with better than expected results and also maintaining its growth guidance. Yash is here with a snapshot.
Well, certainly a strong quarter for HDFC Life Insurance as far as the third quarter is concerned, and what that is doing is, making investors believe that other listed life insurance companies as well could have a strong Q3 as far as financial performance is concerned. To be specific about the numbers for HDFC Life Insurance, except for new business premium, which saw a slight miss in terms of street estimates, all other parameters, total APE, retail APE, value of new business as well as margins were much ahead of street estimates in terms of specific numbers. For new business premium, despite that slight miss, it grew at about 11% to come in at about 7,900 crore rupees. Total APE grew at 12% at about 3569 crore rupees. Retail AP again saw a growth of about 12%. Value of new business grew at about 9%. The number there was about 930 crore rupees. In terms of margins, the street was estimating a higher compression to come in as far as margins are concerned, but the company could restrict it to a much lower number. The margin saw a compression of about 74 basis points to come in at about 20.06% versus 26.8% on a year-on-year basis. The management has maintained its guidance for the year in terms of 18 to 20% of APE growth and more than 15% of VNB growth. What also helped the stock price today is valuations. The stock had corrected significantly in the last 3 months as well as in the last 1 month. HDFC Life was down about 19% in the last 3 months and about 8% in the last 1 month. Also, what is helping the stock price today? In terms of brokerage notes, HSBC and Jefferies both have a buy call on the stock with a target price of 750 rupees per share. CLSA has an outperform call on HDFC Life. They've trimmed their target price to about 690 rupees per share.
Thank you, Yash, for that. Ambareesh, would you buy HDFC Life at these levels?
Absolutely. In fact, we were bullish on HDFC Life for a long time, although it's been underperforming. But these results clearly show that going ahead, things should be much better for HDFC Life. Because you look at the VNB margins, I mean, that's improved 174 basis points Q on Q. Increase in sale of high margin products has happened. And again, these earnings are based on changes in commission in line with the IRDAI regulation. So that's extremely positive. And if you look at the average ticket size of the policies, I mean, that's increased by about 8%. And again, the company has also announced that there's no intimation from the regulator with respect to limiting the bank insurance channel as far as the premium sales are concerned. So, in fact, I have a price target of about 795 for HDFC Life, valuing it about 2.1x FY27 embedded value. And the other two triggers which can happen over the next few months possibly could be the GST adjustment reduction and a possible FDI increase to 100%. I think these are the two triggers waiting to happen.
Okay, all right. Gentlemen, hold on to that thought. Rima, I want to just focus on a couple of IT names. One was the big outperformer in the last 1 year, which is Oracle. That came out with a set of numbers and the stock sold off. While LTTS, there's been an underperformer, virtually unmoved in the last 1 year. And that one came out with a decent set of numbers. The street liked it. Both different ends. Tell us about both.
Well, a lot to do with positioning also. So even LTTS, it's not that it was a blowout quarter. The numbers were largely in line with expectation at the operating level. There was no upgrade in EPS. In fact, there were some downgrades too. But it's just that the stock was an underperformer going into the numbers, and the street said, well, the numbers are fine and the outlook is better, and therefore they went and bought LTTS. So few quick reasons. First, on the guidance for the current year. The current guidance is 8 to 10%. Now, the company is saying organic guidance is 8%. So, yes, lower than the 8 to 10% that the company was talking about earlier. But including the acquisition, they will make it to 10%. But the way to look at it is that given the H1 performance, it was very difficult for the company to achieve 9 to 10%, the upper end. So, in a way, the street was expecting that the company at best will do the lower end of the guidance, which is what they did. The correction perhaps is in the, it's been an underperformer, as we said. The stock is still down 13% from its recent highs. Motilal says the valuations are now attractive. The stock is trading at 27, 28 times forward multiple, and the outlook going ahead is a lot more bullish. The company reported the highest ever large deal wins. It has a lesser exposure to the automotive vertical, which is slowing down. Lesser exposure compared to a KPIT Tech and a Tata Elxsi, and therefore it's relatively more immune. And the management commentary said, was that all the three verticals will grow in Q4 and going ahead. So high-tech, sustainability and automotive. And they also went on to say that the discretionary demand is a lot better than it was 3 months ago. Their pipeline has improved. Now, Oracle Financial Services has had a bit of a slow quarter. Revenue growth was just up 2.5%, down 6% on a year-on-year basis. But if you remember, it was exactly Q3 of last year when the company reported blowout numbers. Revenues went up 25%. And that's what had gotten the street excited. And since then, the stock had a one-way rally. Margins too have contracted in the current quarter, and the stock is up more than 100% in the last 1 year. So basically for Oracle Financial Services, there was a stock price rally, and plus the base was very high because Q3 of last year was a very strong quarter for Oracle. And compared to that, the numbers have shown a bit of a slowdown. Jay, come in. At least in the large cap IT names, we've seen some big moves. HCL Tech on the way down, TCS on the way up. In midcap IT today, LTTS. Any chart which is attractive for a trade for tomorrow?
Well, see, definitely, as far as IT is concerned, Rima, I would say that is going to be Infosys. We really need to see where it's going to take the Nifty IT from here on, because it has just gone sideways after having, outperformed the index quite a lot. And now, after results having come out, I would say that TCS is looking good, but is still stuck in a range as that of LTTS. Most interestingly, Rima, I would say that why LTTS would be a better bet from here on post its results is that we have not seen much of the open interest or the derivatives position right now on LTTS. Rather, we had seen a good amount of long unwinding in this stock, and the stock has somehow managed to trade within a range. Technically, it has formed a nice ascending triangular pattern. It's been trading within a band of say 4,500 to 5,800 now, and having reversed from the lower end of the range, I'm expecting this stock to slowly, gradually inch towards the upper end of the range. And looking at the derivatives position, there aren't much position. So if at all we see a good long build-up from here on, there is a very high probability that this time around, the stock might provide a breakout on the upside after a long time. So based on the results right now, as well as the technicals and derivative positions, I would say that LTTS, that is L&T Tech, looks well positioned, and we really need to see whether Infosys finally provides a breakout beyond 22,000 or not. Else it would be trading with a negative bias.
Okay, all right. Got that, Jay. Well, let's talk about a few more results. Ceat, it didn't react very positively to its numbers. In fact, at the lows of the day, the stock was down more than 5%. It ended off lows, though, while Aeroflex, rocket on that one, was at upper circuit. Vamakshi joins us to dissect both these two numbers. Vamakshi, take it away.
Well, Nigel, Aeroflex reported a good set of numbers. Revenue for the company saw an uptick of nearly 36% year-on-year, coming in at almost 100 crores. The gross profit margin improved by nearly 220 basis points, coming in at 39.9%. And resultantly, we saw an uptick in the EBITDA margin as well, because that saw an improvement of almost 285 basis points, coming in at 21.7%. The net profit saw a very sharp surge of almost 70%. The net profit came in at 15.2 crores. Now, we were also joined by the management, and the management actually highlighted that by the next financial year, they're expecting the European market to growth to catch up with that seen in India as well as the US. FY26 growth is expected to be much better. In fact, they also highlighted that the organic expansion that they announced will be funded entirely from internal accruals over the next 1 to 2 years, and a fundraise is what they're looking at by Q1 of FY26 or earlier. They're still finalizing some details, but a significant portion of this QIP will be used to fund inorganic acquisition opportunities is what they've highlighted. They also say that they're expecting a top line of almost 1,000 crores in the next 3 to 4 years through organic as well as inorganic opportunities. So good set of numbers, good commentary coming in from the management. The stock surged and stayed on the back of that. Ceat, on the other hand, when we look at the numbers, revenue was up nearly 12%, but the raw material cost to sales rose almost 445 basis points on a year-on-year basis, which impacted the margins. They saw a downtick of almost 370 basis points year-on-year. The profit, on the other hand, was also down nearly 46%. So optically, while these numbers look bad, the numbers were largely more or less in line with the street's expectations, and the company also said that demand was stable. They're witnessing healthy year-on-year volume growth in replacement and international business segments, and the OEM part of it was on the recovery trajectory. The order pipeline was robust, and they're expecting the growth momentum to continue. So therefore, while the stock tanked initially, there was some bit of recovery seen in Ceat.
Indeed, pretty decent recovery and the stock ending flat. But let's quickly get to a CNBC TV18 exclusive. The government is mulling over reintroduction of concessional corporate tax rate. This scheme is likely to be for new manufacturing units and would be at 18%. Sources tell us that this is to promote Make in India and create jobs in India. Remember, concessional corporate tax rates were notified in September of 2019 and was given for new units at 15%. Well, after this important update, let's get back to our guests for more. Ambareesh, in the automotive pack, Ceat, what have you made of the numbers, what we heard, and what does it tell you about the other tyre companies?
See, I mean, the numbers weren't really great. In fact, it was a bit disappointing. And I think even going ahead, the next 1 or 2 quarters is going to be like this, because the raw material prices clearly have moved up, and they would find it difficult to pass on, at least immediately. So the next 2 quarters also would be weak. So at these levels, I'll not be a buyer. I'll wait for a correction further.
Okay, all right. Ambareesh, also wanted to ask you about Paytm. You know, the stock out of nowhere has seen a big jump up in the last couple of days. At around 900 rupees, what do you say?
I think at 900, it is a decent buy, because in fact we are looking at levels of about 1200, 1220, because at least in the last 1 year, I think most of the issues which they have, I think, has been sorted out to a very large extent, and they're clearly on a growth trajectory. So any sort of a correction in Paytm, like what we saw in the last few days, clearly, has been a buying opportunity, but even at the current levels can be bought for a target of 1200 plus.
Okay, all right. Well, let's focus on a couple of numbers then. Abhishek joins us to help us out with a couple of banking numbers. Abhishek?
Well, to begin with Axis Bank, the business momentum is the weakest that you are seeing in last 15 quarters. Deposit growth is the lowest in last 15 quarters, coming in at 9% YOY, and advances growth is much weaker than deposit growth at about 8.8% YOY. The other income is down about 11% on a sequential basis. Operating efficiency is one of the best in last 7 quarters, with cost to income ratio being at 46.2 versus 47% sequentially. Now, this is because the overall OPEX is down about 4.7% quarter-on-quarter and grown by just 1% YOY. Operating profits are down by 1.7% sequentially. It's the lower provisions which has aided the PAT this time around. Gross NPA is up only 2.5% in absolute value on sequential basis. Net NPA is up 4.5% quarter-on-quarter. So gross NPA ratio has inched up by just 2 basis points sequentially, and net NPA by just 1 basis point sequentially. The NI is weaker than our poll. The PAT is ahead of our poll due to lower OPEX. Back to you.
Thank you very much for that. With that, it's time for a short break. We'll thank our experts as well for joining in. On the other side, top corporate voices along with the key market events to watch for. Stay tuned.
Welcome back. You're tuned into Markets Forward. As promised, let's take you through all the top corporate voices that we got during the course of the day. L&T Tech Services management says their pipeline is showing improvement both sequentially as well as on an annual basis, with demand environment also better than it was the same time last year. The company expects Q4 margins to remain similar to Q3, and it's confident that all three segments will experience growth in Q4 and FY26. Additionally, the company is maintaining its medium-term aspiration of reaching $2 billion in revenues and margins of around 17 to 18%.
Now, 5 PSU banks, including UCO Bank, were in focus after the government approved a 2,000 crore QIP for each of them. Now, UCO Bank told us and confirmed the fundraise plans and said this move will result in a reduction of 3% of the government stake. Additionally, the bank is targeting a credit deposit ratio of 75% in line with its guidance.
An auto components maker, Minda Corporation, has acquired 49% stake in Flash Electronics with a strategic aim of building a significant electric vehicle platform. The company anticipates a profit of around 50 to around 55 crores from this acquisition and is targeting around 5,500 crores in revenues. Additionally, the contribution of EVs to Flash Electronics revenue is projected to jump up to around 25% by FY26.
And before we wrap, let's get you the big events, the market events to watch tomorrow. Abhishek is back with us.
Well, Rima, to begin with, China will come out with the GDP growth rate number tomorrow. It's estimated to be at 5% versus 4.6% that it had grown last time around. Watch out for India. The RBI data will come out. Bank deposit growth had fallen to multi-quarter low last time when it had come out at 9.9%. Even the bank loan growth data was on the lower side last time around. It was at 11.2% YOY. That data will be keenly watched. Now, Forex reserve has been falling. So last time it was at $635 billion. How much that will come out will be seen closely. Ex-dividend SCL Tech, interim dividend of 12 rupees and special dividend of 6 rupees. So it will trade X of dividends. TCS also special dividend of rupees 66 and interim dividend of rupees 10. Now, one stock that will go X bonus is Kitex Garments. It will go in the ratio of 2:1. We have earnings season. So results that will come out tomorrow include Jio Financial, ICICI Lombard, SBI Life, Tech Mahindra as well as Wipro. On the weekend, we have results coming in from Kotak Mahindra Bank, RBL Bank and Canfin Homes. Back to you.
Thanks a lot for that, Abhishek. Well, on that note, we'll wrap up on this edition of Markets Forward. More news and updates on the other side.